The secret of success is constancy to purpose. Benjamin Disraeli. My friends, for us, that means each and every day 10 to 15 minutes sticking with the markets, following price movement. Each and every day, you continue to learn the nuances of the market, what's going on, how things move, why they move, what moves them. And all it takes is that constancy to purpose. That is, a little bit of time each and every day. It's the way you stay in shape. It's the way you push through and read a book. It is the way that the world works. Perseverance. Just, how does that saying go? You move a mountain one stone at a time. So start moving those mountains. Let's jump into these charts. As we look at, and this is important, as we approach the end of the year, what are we seeing happening? Well, we see that the market is up today as far as stocks go. Everything else is down, but we have a red down candle. Now check this out. You can see where we had a big down day last Wednesday, the 18th. We also had a big down morning on Friday. Well, we had a lot of volatility is what we'll say. Ended up not being down anywhere near where it plunged to. We see where it popped up in the afternoon. And then on Monday morning, what did we see happen? Well, we had a doji, then we had some up movement later in the day, but all of this is pulled together with our Heikin-Ashi candlesticks to, again, give us a down candle forming for the week. Now, it's important to note that we are nowhere near the low in the volatility from last week. But we're starting this week off in the red. Look at all the volume we had last week with all the attempt to find where price was going to go. And then this week, our Heikin-Ashi candlesticks. And I tell you what, I'm going to put at the end of today's training, it's so important for you to understand what the market is telling you right now in average pace, which is what the Heikin-Ashi candlestick helps you see. It's not high open, low close. It actually helps you see the average pace of price movement, and you couple that in the way that we watch the market with volume. In fact, I'm going to put both the volume, the great volume training we have, and the really good Heikin-Ashi candlestick training we have. I'm going to put both of them at the end of today's video. Would you spend some time over Christmas just watching both of those, taking notes, paying attention, getting the gist of what you are being told so you understand how volume and how price movement work together to give you clues as to what investor sentiment actually is on each of the three charts that we look at. Now remember, we trade off what? The weekly chart. Weekly chart for big money. And again, when we say trading, we're talking about practice trading. We're not a stock calling service. You don't pay us anything. We do have people that donate and help support the work we do here at Patreon, but we're not giving you market advice. We're helping you educate yourself and learn to follow price so that you can then anticipate it and learn to do it better and better and better through your practice trade. So what we see happening here as far as investor sentiment goes is we see it going from positive into negative, at least as we've started this week. Now remember, markets are closed tomorrow early at 1 p.m. They are closed all day on Christmas Day, and then they are open again for the rest of the week. So let's watch and see how this shortened week plays itself out. The market could boom up big tomorrow. It was up today, but based upon what's been going on with price, and again, I say that with some trepidation because we haven't hit the lows that we hit last week yet, and it was up for the day, but there is some downward pressure, so we will keep an eye on that. Let's look at the NASDAQ 100. What do we see there? Less downward pressure. It's a doji, so it's showing lots of indecision as we start this week. It was up 0.81%, but again, we see the same thing on Wednesday, particularly in the morning. Look at all of that volatility. And in the afternoon, down. Then we see where things were down in the morning on Thursday. That's Thursday afternoon. So down in the morning, Wednesday afternoon, forgive me. Then Thursday morning, then Thursday afternoon. Then Friday, we saw all this ranging in movement, and then it's ticking up, still below that trend line. It's below the trend line on the 2-day chart also, not hitting the depths, but starting this week off after all this volume last week, starting this week off with a doji. So again, we see some downward pressure there too that gives us some clues as to the fact that the legs could be being pulled out and undermining all of this up movement. So we will keep an eye on that. It's just the first day of a short week, but we want to just pay attention to the clues we are getting from the charts. What's up with bonds? Well, bonds are down for the day, 0.92%. We had a down week last week, a down week the week before. Haven't had a lot of volume in those prior weeks where the market ticked up for 2 weeks, beginning the 25th of November and the first week in December, starting on the 2nd. Then we can see where we had a doji forming, followed by a down week, now followed by another down week as bonds begin to, again, descend as they did for many, many, many weeks, starting back where you had the interim topping in early to mid-September, then all that down move through the mid point in November, up for a couple of weeks at the end of November, beginning of December, and then this new decline in bonds. So we'll watch as bonds continue to accelerate down. What about gold? Well, we had the classic turnaround that, of course, we traded. That was beautiful. Things moved up. We traded this move. Things moved up with average volume, interim high, a green spinning top, red spinning top, which is our telltale sign of a rotation over. The opposite is true with the rotation up. We get a green spinning top, but in this one, we jumped in. And of course, we had a big, strong down week. Then things just got crazy in gold. It just sort of had a doji there, another week, followed by another week. Then we had an up week back on the week beginning the 9th of December. Then last week moving down, and this week sort of resuming that. So we'll watch as gold continues. I think because of the interim high and the red spinning top and the big strong down week, there is still a lot of downward pressure in gold as it starts this shortened week off, heading toward the end of the year, moving down. And lastly, what's up with Bitcoin? Well, Bitcoin had this crazy climb. We look at what Bitcoin did last week, and we see the kind of candle it gave us. It gave us a green spinning top, little bit of down movement on the wick, but you can see where all this price discovery trying to move up and just could not hold it. And then rolling over this week, starting the week off down, we can see where that price discovery hit up on the high on Tuesday of last week. In the morning, had a green candle. In the afternoon, slowing. And then starting on Wednesday, all that downward pressure continuing to push through on Monday. So we'll continue to keep an eye on Bitcoin as it also goes into the red, or in some of these others, continuing red down movement as things weaken at the end of the year. Be sure to watch those two videos I'm going to put out for everyone today at the end of this video. Watch them, study them, understand that interaction between price movement and volume. It is so key and critical. And when you team up the volume metrics, the volume indicator, and using this average line on your charts with your Heikin Ashi candlesticks, it gives you such an unbeatable combination in helping you figure out what's actually going on with price. That is so important. Thanks so much for being with us. Merry Christmas and Happy Hanukkah.